Hey guys, welcome to part 3 of liquidity. Alright, so in today's video, I'll be going over external liquidity. Alright, so external liquidity is basically money that is sitting above or below range highs and lows. So it's basically people's stop losses sitting above range highs and range lows. Going back to the structure section of the SMC course, we talked about structure, all right? And we basically said that structure, well, for a bullish scenario, structure is your lower highs, higher lows and higher highs, okay? So as you can see right here, price is bullish, printing higher highs and higher lows, all right? So essentially what it is your external liquidity are your range highs and lows, meaning they're your structural highs and lows. All right. So for example, this right here is your external liquidity, right? This right here is your external high, which is also your external liquidity. All right. This right here is also your external liquidity, right? Because it's your range low or your structural low. This right here is also your external liquidity. All right. So external liquidity is actually very simple. It's basically your structural highs and lows. Okay, let me just write it down so you guys can visualize it a little better. Liquidity. Okay, below here, above here. Okay, so these are your external liquidity. All right, same thing goes for a bearish scenario. Okay, so a bearish scenario is when price is creating lower lows and lower highs. Okay. All right, so your external liquidity are basically your range highs and lows. So same thing goes for this. Okay, that's your external liquidity. This is also your external liquidity. And this one right here is also your external liquidity. Okay. All right, so I drew it out for you guys so you guys have a better understanding of what it looks like. Okay. What you guys have to understand is once external liquidity is ran, right? Once external liquidity is taken, ran, swept, whatever you want to say. But essentially, once it's ran, we can anticipate a move back in the opposite direction. All right, so look how each time price broke above an external liquidity, it pulled back. Okay, there was a move in the opposite direction. So if the direction was going up, after taking out the external liquidity, price moves down and then prints a higher low, moves up, takes the external liquidity, and then you can anticipate a move back down. Same thing goes for a bearish scenario. Look how each time the external liquidity, right, each time the external liquidity is ran, price moves in the opposite direction. And then comes lower, external liquidity is ran, and then you can anticipate price moving back in the opposite direction. All right, so now let's go on to the actual charts and show you guys how it looks like. All right. All right, so we're on EURUSD. As you can see here, right, there's your external liquidity points, which are right here. So these are all your external liquidity points. Okay, how do you know this? Well, because look, right, these are your structural highs and lows. This is the higher high, higher low, right, which led to a break of structure, higher high, and then a higher low, right, going up. Then after, a pullback, taking out your external liquidity. All right, so Like I said, every time price takes out your external liquidity points, it has a move in the opposite direction. Okay? So look at this. This right here, for example, price moves up and then has a move down. Okay? And then what happens? Price moves up again, taking out your external liquidity points or your external liquidity, and then has a move down in the opposite direction. Okay? And then a move up, taking out your external liquidity, and then has a move down in the opposite direction. Okay? And then you'll see price takes out this external liquidity, also takes out this external liquidity, and then what happens? Price moves in the opposite direction. Okay? So the point of this is so you guys understand that the market literally moves from liquidity to liquidity. All right, so that's how the market moves. It's not structure, okay? It's not higher highs, higher lows. Yes, you can look at it to identify your bullish, like that the market is bullish or whatnot. But you also have to understand that it's not all about structure, okay? Structure is your liquidity, all right? So essentially, right, even though price took out these external liquidity points, I'm still bullish on euro. Okay, so just because it took out your external liquidity right here, right, a lot of traders are going to look at this as a break of structure, but you have to understand that that's not how the market moves, right? It's not structure. It's basically from liquidity to liquidity, all right? So every time, look, over here, price took out your liquidity, moves down, right? Takes out liquidity over here and then moves up. Takes out your liquidity, moves down, right? Takes out your liquidity over here, and then moves up. All right, so all it's doing is going from liquidity to liquidity. Okay, so the next point of liquidity would be these highs. All right, so that's my point. It's not structure. Okay, a lot of people can see this break of structure to the downside. Oh, let me, it's gonna continue going lower forever, but that's not how the market moves, right? It just moves from liquidity to liquidity. All right, so this is the end of the external liquidity section, right? Or the external liquidity video. And in the next video, I will be talking about internal liquidity. All right, so let's head over to the next video.